Uh, Good afternoon. Pleasure to be here. Thank you, Marty. And my name is Arthur Mrozowski. I'm 35-year veteran of Silicon Valley in different aspects, not fintech, but actually one of my first fintech stints was with the MasterCard, where we created the first prepaid card in the year 2000. So that was a long time ago. Since then, I've done another round of different investments and commitments in the different types of industries. Right now, I'm doing the IoT, and then I have a ring that has the embedded payment system. And also, I have two kids that are better qualified than myself here in the terms of success, because they're kind of like halfway unicorns. They're 26-year-olds, and yeah, typical San Francisco style fast run companies. And then I'm being a little bit competitive in the jacket here today. Lost my clothes because the airline forgot. But lost my suitcase, and I don't know where it is. By the time that I get it, it's probably going to be.
You had tokenized it, you would have had it.
Exactly. But the whole business of fintech looks like you need to be competitive. Just give you a little bit of a force. So, anyways, enough about me. I think that we have a fantastic panel and people that are most experienced in terms of not only the family offices, but in broader sense of the fintech world. And we have Julia and Ron that we've been doing the panels for quite some time. And I would like turn the microphone back to Julia and having her introduce herself, and then Ron, and then we'll go to the our conversation of what's going on in the world of fintech.
Thank you.
Yeah, it's hot.
Hello. Hey. Hi, everybody. Thanks for being here on this wonderful afternoon. Marty, thank you so much again. What a great event. It's hard to compete with yesterday, though, where some of the panels were just amazing and really inspiring. And my experiences in fintech, starting with JP Morgan on sell side in investment banking technology, and then D. Shaw, and then Moose Partners. It's a top 10 family office. And then I was CTO and COO of the Wisconsin Pension Fund, 110 billion under management. So I've lived fintech, and I've been doing a demo or two a week for years. And today we'll try to pull some of this information together for you.
Thank you so much. Ron DeVore, my story is very straightforward. Engineering and both academics and advanced design, McDonald Douglas, then you and Brandeis and State Street BlackRock, our alternative structured products globally, both on risk taking and advising, and then NewOak and its babies on trying to essentially bring in the technologies that are used in asset management very prevalently for BlackRock, but bring essentially world of finance in a much more transparent way and make it democratized, which is really comes down to transparency and be able to fractionalize and to be able to analyze and have data-rich solutions. And I pointed out embedded finance because I think you're going to hear that word if you haven't, because everything ultimately depends on finance, including entertainment, including sports, including payrolls and whatnot. And that's what we're focused on.
Yes, just keep it on.
Okay. So I just wanted to start with you, Julia, because we all know the troubles right now about the fintechs. Like round A is probably, or pre-seed is the only thing that one can get out of the venture capital, and all the bigger rounds like a C and D are kind of like forget it without downgrading the valuations.
Where's your mic?
Without the downgraded valuations. So, but this like to become more specific about what it is that we're trying to do is kind of focus on the family office. And I think that Julia, you created this beautiful graphic, and I would like you to explain to us exactly how you see the snapshot of the family offices and then all the financial data. So I'll let you talk about it and we go through that.
Marty, thank you so much for putting this up there. So as you know, fintech is a multi-billion-dollar industry. It's going to be in the trillions very, very soon. So for some of our panels, what we're trying to do is we're trying to kind of focus the discussion on a specific topic. And so today, what we wanted to discuss briefly is what are the fintech firms that actually cater specifically to family offices. So if you're running your own family office or someone from a family office asks you, what should I be looking at? I'm trying to get out of spreadsheets. I'm trying to create a target operating model. What should you look at and how do you think about it? And how do we group some of these fintechs? So it's almost impossible to get a fully comprehensive list because every month we drop something off because of M&A and we add something on because we hear of something new. But this is useful nonetheless because, and this is as of this month, literally. So it's useful to know how you're grouping, some of these companies. It just helps you to conceptualize and look at, where should I be looking at. So the way that we do it is we first of all look at the end-to-end multi-asset platforms. And there are companies like your former employer, BlackRock, that is trying to build these, end-to-end platforms basically mean that you can get these systems and they will do 95% of what you need them to do right out of the box. And then, of course, there's some kind of application development that happens to fill in the rest. So think of these platforms as continents, and there's always water, right, connecting them, and that's your custom application development and all the APIs, and could be embedded finance, it could be chat GPT APIs, etc. We'll talk about that, right? But BlackRock was basically trying to come up with a platform. First of all, they had Aladdin, that's public assets, and they also bought IvyFON, a French company. They bought it because they wanted to also pull in the private assets, right? And IvyFON handles private equity and real estate and private debt, and they're building out the rest of the modules. And the promise is that it's all going to be connected, and you can just get that, and it's front to back. And of course, this caters to very large multi-billion-dollar family offices. Is total overkill for anything else. And so the rest of the players in the end-to-end multi-asset platforms are there, and you can get the graphic from Marty. It's it's available to anyone who would like it. Happy to send it, and Marty has it. And then we have digital asset players. We have governance and communication. So companies that actually help facilitate secure communication between family members. There is CRM, and we split it between industry specific, like something that is geared specifically, built specifically for family offices. And there are great CRMs that are inexpensive and they're not industry specific, but they're so inexpensive and so flexible that sometimes people just pick them up. And one of them is an open source CRM. There are 5 million, over 5 million downloads, and you don't have to pay anything unless you want to get support. There's also ERP and forecasting. There are alternative investment marketplaces that have been coming up like mushrooms. Each of them, there's one for royalties, there's another one for private equity, there's another one for venture. I mean, all of them are pretty cool, and there's some for impact investments as well. So we've been seeing a lot more of them, and I've been adding. Then there's portfolio management and consolidated reporting. And some of these systems are more on the true portfolio management side with the calculations and um, the multiples, and they give you true portfolio management metrics, and others are light on quant, and they're really consolidated reporting. They will pull in all of the data from various sources, from brokerages, etc. Then you have risk management, you have data aggregation and integration, which I want to touch upon that later, because now there are firms that integrate 700 to 800 different APIs, and you only have to connect once and you really grab everything. And then there's portfolio analytics, due diligence, ESG and impact, treasury, AI deal sourcing with machine learning behind it. So you can source deals for venture funds, obviously, and then back office accounting and fund admins. And imagine all of this swirling around there, and there are salespeople coming from each of these, and saying basically what they can do. So that's the map.
Oh, thank you. And then Ron, I know that you have a little bit of a couple of really interesting platforms that you have developed yourself, and then you're heavily invested in embedded payments, right? I wanted to find out, like, to me, the embedded payments are the new thing, and in terms of how the new generations of young people are utilizing the day-to-day spending. And can you tell us about, like, all your cool things that you've been doing in the last year or so?
Oh, thank you so much. As I mentioned, finance and technology are extremely compatible, and we're really have not even seen. Can you hear me better? So you're seeing a lot of techies and you see a lot of finnies. Finnies are finance guys without really understanding tech, and there are a lot of techies that don't understand finance, that don't understand you. And what happens is they end up creating lots of applications that are effectively standalone, and they don't really give you an ecosystem at the end of the day. When I was teaching finance at a graduate level, I asked the students, what's the most impactful financial innovation that they experienced. A lot of people that you actually have used, a lot of people went around and nobody came up with the answer, but it happens to be credit card. Credit card has impacted. Imagine if there were no credit cards and debit cards and prepaid cards. And now we're seeing that digitized, where you tap. I just came from London. I was able to move around without ever having to stand in line, get essentially your subway tickets, if you will. So I think this is the beginning of, essentially this become really not only your source of data, but also your source of identity and your source of ability to transact. So the issue is, where does this leave us with regard to Visa, MasterCard? These are open loop type of applications, and Fiserv and FIS. Look at the valuation of these companies and look at the technology that these guys are using today. They're in the dark ages in reality, and they're very slow. So bring it back to what we have been doing, is looking at B2B2C, B2B2B, and B2C, and figuring out how do you actually intermediate all these other chains. And because of technology and connectivity, that is extremely possible today, and ultimately comes down to transaction management, KYC, credit, and segregating the funds and being able to source essentially deals, right? I'm not talking about large deals. I'm talking about a small but high frequency. And that's where diversity comes in. And how do you democratize that investment, that everybody can invest in a small portfolio of, let's say, credit card receivables or earned wage access, providing essentially somebody's salary before the payday without an interest, with some small amount of fee that they can have liquidity. So NewOak Finance, that's really the goal, and the infrastructure that we built is essentially to eliminate all these what are considered APIs and other things that were blockers, and really have a full ecosystem for transaction management, employer dashboards, admin dashboards, uh, due diligence of the receiver, due diligence of the investor, if you will, or capital, and go from there. So that's just one of those examples.
Great. Well, you did not mention the one that I'm kind of interested, the embedded
Finance, right?
finance. Well, just if you can explain
Sure.
on how that works. So everybody is kind of educated at the end of the day. Like
Sure.
everybody talks about Chat GPT, but nobody. So it's
So embedded finance is, there's a marketplace today. That marketplace is internet or your phones, right? That's where the marketplace is. That's where anything you're trying to do requires essentially putting some information, whether it's your credit card, you're buying, you go down to the essentially to the checkout. At the checkout, normally is asking you for pay. What do you want to? How do you want to pay for it? And you essentially end up with a Visa, MasterCard, or a PayPal, or something of that nature, or buy now, pay later, right? The alternative would be for us essentially having an arrangement directly that is already pre-made with the merchants, and be able to extend credit instantly as a revolver without using Visa or MasterCard. That is an embedded finance. How do we achieve that? We go to Shopify, you become partner with Shopify. Shopify has 1.4 million merchants. They all have some form of web presence, and therefore we show up on their screen, on their website, or in their app, and they see future pay. And that's one example. The second example of embedded finance would be essentially interacting the relationship between employer and employees, and in fact, bridging that relationship and providing what are benefits that otherwise the employees are not going to be able to afford without disrupting their finances, if you will. And that's Orbis Pay. And the company that allows to do that is Finplus Tech, which is our I don't want to sound like advertising, but essentially looking at all this as data lake. And the data lake involves, mixing what are considered not only transaction data, but compliance data by essentially fraud, everything else, all is in this database where you effectively are developing a relation as you're acquiring clients without having to make Google rich, if you will. And because, the data is what you really, the merchant is bringing you, or the employer is bringing you the benefits of that relationship. And that's one. If you're doing the same thing with a marketplace with SMEs, supply chain. In a supply chain right now, the banks, if you're not over, $100, $200 million worth of, or 200 million really falls on the smaller side of, what the banks are willing to do on receivables. So you get into that, and that is totally digitizable in terms of the validity of that, and that takes you to the world of what are considered asset-based, fully validated type of, where you can actually replace an army of due diligence people for making sure that there's really no fraud, and be able to extend money. And clients of these are largest PE firms, but they're not going to go source it. Effectively, they come to people like us to effectively put money into these platforms that go ultimately supply what used to be a bank function becomes a non-bank finance, essentially an embedded finance function. These are some of the things. So I thought the world, when I left BlackRock, I was 100% institutional and focused on what I consider primarily 144A public market. And I thought that area is way too already competitive. But I think Julia brought a good point. It turns out the family office function is not much different than what a BlackRock does in terms of portfolio management, except that they don't have the budget of BlackRock to be able to build these technologies. They're very, I mean, these things require so much attention and architecture. So we still haven't seen a solution that addresses every need of these, what ends up being essentially merchant capitalists, right?
Yeah. So Julia, did you want to add on into Ron's?
Yes, I thought that was an excellent discussion of embedded finance. And what comes to mind for me when I hear embedded finance is that there's a very large percentage of US population that is living paycheck to paycheck. And there are studies that if you read them, they're chilling because people in that category are $400 away from complete catastrophe, meaning there's to give you an example that was used in the research study that I read. For example, people who work at senior homes, like senior housing, right? Employees that actually are in service. So some of them have to drive to work, and if the car breaks down and the repairs are over $400, they don't have the savings to do the repairs. They don't show up for work. They get fired. They can't get another job. I mean, literally, it's just like they don't have the means to deal with any financial event that's over $400 because they don't have the savings and they don't have the access to credit. So embedded finance, in the sense that they get advance pay or any means of being able to cover a situation like that, is huge. And so a lot of impact investors focus on that aspect of it. And percentages, I could be wrong right now, it's like maybe it's way over 20% of US population that's in that situation right now. So there is social good.
The Federal Reserve has published, Federal Reserve has published 50 million of Americans live paycheck to paycheck. And if you're a head of HR of any enterprise that have what I consider people that are paid $3,000 to $5,000 a month, you find that HR actually has to have a petty cash. Yeah. And they're really sick and tired of trying to be able to track that, and a lot of them end up not wanting to deal with that. And you know, on the other side, the employees are finding that you know, in our own industry, for example, if you're looking at a mortgage servicers, you're looking at mortgage originators. You know, a lot of these folks absolutely need liquidity between payday, and this is not a payday loan. By law, it's not a payday loan, and you're not charging interest. You're only charging per transaction. It's not proportional to time or size. So that's very important. You don't need a license as a lender. You just need to be to collaborate and make sure the solution is really what the ultimate. And technology makes that fully scalable and also investable, because a lot of people, if you imagine how much cash is in the system that it goes into, effectively, think of Silicon Valley Bank, you know, all the cash they had. If just take 10% of that cash and did this, they would have made a huge impact on the quality of our workers. And then if you go international, that gets even worse. Indonesia, certainly India, certainly Pakistan, certainly Bangladesh. You know, so I think the potential for it to develop a relationship and close the gap between employer and employees is. We saw. I mean, when I saw that opportunity, I couldn't pass up, and I became totally in love with it.
Well, thanks, Ron. Julia, after hearing all those depressing statistics, let's move on to something that more cheerful, right? You know, there's a bunch of new technologies that are kind of emerging. The Chat GPT. We talked yesterday. Tim Draper had a really good view on the subject, but But I wanted to actually focus right now on the fact that there's a lot of opportunities right now to create the SaaS-like products that utilize the AI like tools and what is it that we, meaning the family office, are having, and what we're cooking up here, because I know that you're the best prepared person to answer that question. So
Yeah, I brought the cheat sheet. Okay, so Chat GPT, as you know, offers an API, and that means that you can incorporate that into your infrastructure, and it can work alongside with whatever that you're doing. I want to go over industry-specific cases of where we actually see adoption of Chat GPT, not necessarily for family offices, but when I say family offices, I also think portfolio companies, and usually the questions come up, how could we use it for our portfolio companies, right? So we'll zoom through that very quickly. Marketing content generation, product descriptions, email marketing campaign, it's actually actively being used there. Copywriting, generating headlines, taglines, copy, using that natural language for copywriting for your website or conference invites, whatever, that's being used. Sales automation, lead generation, qualification, personal sales outreach, doing all that. I don't know how it's applicable to family offices, but one of the use cases. Text analysis is big, right? So obviously, ChatGPT can perform text analysis tasks. That includes sentiment analysis, which is useful for trading, topic modeling, language translation, classification. It's a great tool for text classification tasks, spam filtering, sentiment analysis, topic classification, programming assistance. It can write very simple code. I don't know if I would trust it to write my code, but
there's always checkers.
Well, more importantly, actually it finds the bug in your code.
yeah, for debugging for sure. Anything, yeah.
They're using it.
As long as you don't have to do it yourself, yeah, anything goes. Okay, and then a business information search, extracting relevant insights from financial reports. Obviously, that's big. Identifying industry trends. So anywhere you have a lot of information and you want it summarized, doesn't replace critical thinking skills, but obviously helps with all these tasks. To add,
Yeah, I think one example, we're working with a company out of US and Singapore, and it's called Hatcher. And what they have done is they've integrated essentially data from every single accelerators. So they've essentially taken every single pitch book that you could possibly imagine, and then you put a new idea in. So it allows you to be able to figure out the best cohort, the best channel, and the best category, if you wish, and you can build a portfolio on. And that's the AI-based. But more importantly, if you don't have data, I guess all of these are irrelevant as much. But also, if you pitch a given, let's say, idea in a given industry, it will come back and not give you the what your pitch should be, but more importantly, we'll do essentially strength witness, a SWOT analysis of that, and gives you even a lot of things that you would have had to have not only a Harvard business degree, but lots of years of experience to be able to actually present that. Obviously, that's something. I think due diligence is one of the biggest problem, and a lot of times when we go to family offices, I don't know anything about all this. I can't invest, and so well, let's see what ChatGPT say about it.
Yeah,
and you will find very interesting things about what you just proposed because it's already trained on that data.
sounds good. Actually, before the panel today, I decided to ask ChatGPT what questions to ask. And I had such a plethora. I really. But no, if you want to, actually, it was pretty smart because one of the subjects we did not touch is the DeFi. And then we should actually talk about it. But it's amazing because I got a. Well, I pressed the button.
You said
one
140.
time, and then it gave me 15 questions. I got a 60 questions.
I saw it on your laptop and I figured you actually prepared.
No, I mean, I don't have to prepare it because a lot of the stuff is.
Do you
in
know
my head.
Marty has a no cheating?
Under 10 minutes.
Okay, thanks. Good. Well, I know the fact because there's a question.
Back to the relation between fintech and the family office. ChatGPT is very interesting, but your chat was very insightful on how fintech can be used in the family office. And I think that one of the pain points of the family office leaders, the patriarch or the money manager, the decision maker, is consolidating the information to be able to have a information-based decision-making process.
Yes.
Right? And I think that there's consolidating companies like Adipar. I don't know if you had Adipar there,
Yeah.
but
course,
Adipar
of
and
course I did.
services like Adipar that they can actually integrate private businesses, any type of asset, and you can report it and any type. Because if you're a family office manager or company owner holding whatever you want to know where your assets are. Whatever the private bankers tell you when you sit down in a meeting, oh, we can tell you asset allocation, asset location, weightings, industry verticals, everything. That is impossible to do it from a BlackRock platform because they are liable for a lot of things that they would like to say and they cannot say legally because of BSA or whatever, or compliance or AML. When you are in a family office, it's your information. You aggregate it as you wish. And what you need is a BI expert that has a tool like this that can give you a dashboard that throws out a 4-page report that gives you the information you need to be able to make decisions for the next 12 months, 24, 36 months. I don't know. Do you have an insight on what would be the ideal package to do that?
Yeah, I do actually. There are. I'm trying to. This is a very complex question, and so I'm trying to. Okay, the way that I would summarize is like this. Everything starts with two things, right? That are inputs into how to get the right output out of all of that. And the first question is, what is the asset class mix that the family office has, right? And the second question is, what is the structure? How many filters do you need for your data? Meaning, how many family members are there? How many trusts are there? And when you are looking at when you are doing your portfolio analysis or asset class analysis, right? Or geographic exposure, any type of exposure reporting, how do you want to see that? Because for a very large family office, I had to look at that and see, do we want to see it per family member? Do we want to see it per dynasty? And also, do we want to see it what's being funded out of a particular trust or trust roll-ups? Because you also have generation skipping trusts. So all of these filters need to be built in at the very beginning, because otherwise you're not going to be able to see it, how slice and dice that data, how you want to slice and dice it, because it doesn't help just to optimize the entire portfolio.
Those are the queries, yeah, but
Right.
the information, like I understand, you have 4 or 5 filters. You have liquid, you have real estate, you have private investments, you have non-producing assets, which is.
By the way, we have we got to pretty much wrap up the whole panel, but I wanted to add to the Adipar thing that not that many people know who that company is, but essentially Adipar is a derivative of the company called Palantir, which is a company tracking down on stuff in London. And the same team created the tools to analyze all the data there is out there for Palantir. They came up and then they say, hey, let's figure it out if we can apply the same technology to the business decision making. And
so to answer your question on Adipar, it's a great tool. I saw it about 10 years ago when I was at Moose. Their founding investor is a good friend of mine, and love the tech, but don't love the fact that it doesn't allocate automatically. There's no allocation rule engine. where you can put in the percentages of ownership and it's tapped down through all of the entities and trusts would actually calculate that automatically. I think in the 21st century, it should happen. I used eFront and built that out custom for the family office, and it happened automatically. And we can happy to talk more about that. But the target operating model is going to combine either a platform, an end-to-end platform that's going to give you the most bang for your buck, or it could be best of breed, where you choose the best of breed systems and then integrate them through APIs into one combined infrastructure, and then custom build probably risk management because nobody does that well.
Yeah, Ron, we got to wrap up. I think that we have less than a minute. So just like a quick wrap up of what it is that we think about the fintech slash family office till next session, right? And we have to let the other.
Where one of our latest endeavors, we know it's going to require a lot of capital, but we've been approached to look at private asset access to smart chain, smart contracts. We know that that's a lot of talk has been said, but there's really no what to consider platform that can handle from origination, underwriting, essentially management, allocation, and bring an ecosystem that not only the issuers, but also the investors and are working on. I think you should be very watchful of applications of blockchain. They will start surfacing, but they're really mature in 10, 15 years. So,
That's because securitized, they do that, you're saying.
yeah, but see, the current blockchain tokenization is very shallow. It doesn't have the validators. So you still have to do, it's a Web 2 to Web 3 bridge, right? Web 2 is 2 days. And we're seeing that even people have not integrated Web 2 well, right? So you're far away from what I consider. So anything you see on the blockchain is it's just a cap table at the end of the day. And you really want to, how hard is that? It is valuable, but it doesn't give you the buy, so it doesn't create liquidity. The potential of the blockchain is to make the private asset almost as transparent or even more transparent, because you're going inside the asset as opposed to superficially touching it. So I consider, essentially you're relying on the companies, the performance, the management, and the auditors, right? You're not really, in many of those, you really don't understand the mechanics underneath. One of the things I always say, if Adani came to us 10 years ago and we had blockchain, he would not be in a position that he would be accused of, internal dealings. So what I think is that we're at the very beginning of a revolution, very beginning. That doesn't mean that the early companies are going to survive or are going to succeed, but 10, 15, 20 years from now, there is an opportunity that will have a much deeper, much better, much reliable, what I can say, private asset investment. But I think that's where I think it's going to be very exciting for us that are techies and finnies to be able to go there.
Fantastic. Great job, guys.
Last remark on the putting fin into tech, because I like that. Check out Actus, because what these guys are doing is putting in the cash flow model behind the tokenization. They're basically saying that's so critical. And finally, somebody out of Switzerland is doing that with FDIC advisor and Actus, I think actus.org. And they're modeling all of the cash flows. They're like, what type of instrument are you looking at? And that's going to be added to tokenization. And I think that's what's required for the revolution.
Yeah, if you add analytics to the chain, that makes a huge difference.
Not just analytics.
Yeah.
Fantastic job, guys. Thanks so much.